Good morning, one and all. Today I will discuss what is an account. What is account? Account. 1 minute. What is an account? Account is record of transactions under particular head. Your account. What is the meaning of account? Account is a record of transactions under a particular head. Suppose Ravi account. It is a particular head. You are preparing the ledger account, the Ravi account. Ravi related all the transactions are entered into that account only. So it records not only the amount of transactions but of their effect and directions. So the account is divided into two. One is the debit, another one is the credit. One is the debit, another one is the credit. Debit and credit. I mentioned here account pro forma. So left side you consider as a debit, right side you consider as a credit. And the left side means date, particulars, JF number, amount. These are the left side. This left side you consider as a debit, right side you consider as a credit. In the debit side indication, to indication, credit side indication, by indication. This is the account. If you are preparing the accounts, compulsorily you have some idea about the accounts, rules and regulations. Here now I explain the classification of accounts. Classification of accounts. Accounts are classified into two types. One is the traditional classification and modern classification. Now I will discuss traditional classification of accounts. Traditional classification of accounts. Traditional classification of accounts. Under this classification, accounts are classified into two groups. Accounts are classified into two groups. One is the personal, another one is the impersonal. One is the personal, another one is the impersonal. So personal account. The personal accounts are, these are the accounts of individuals and firms. Individuals and firms. So again, the personal account can be classified into three categories. Again, classified into three categories. First one is the natural personal account. Natural personal account. Natural personal account means these accounts are individuals, are human beings. Individuals are human beings. Human beings, I am a human being. My name is Sri Hari. Suppose Ravi account, Kiran account, these are all are the individual names, human beings name. Then all the names are under the natural personal account. Natural personal account. In next second one, artificial personal account. Artificial personal account. These accounts include accounts or corporate bodies or institutions which are recognized as person in business dealings. That is the legal entity concept is applicable. So legally you are framing the corporate bodies. Suppose an example, companies related. So a companies, any limited company or private company, clubs or institution, firms, corporate society, banking, these are all are the artificial persons only. These are all are the artificial person. Suppose Wipro company, it is a company. So it is a artificial person. In the SBI bank, it is artificial. Avinash College, it is the artificial person. In KNR IT solutions, it is the artificial person. So next, any partnership firm, Ravi and Co. This is also partnership firm, entrepreneurs. These are all are under the artificial personal account. In the next third one, representative personal account. Representative personal account. These are the accounts which represent certain persons or group of persons. Certain persons or group of person. These are the personal accounts without having the name of individuals or firms. For example, capital. Capital under consider as a representative personal account. Drawings under the representative personal account. Outstanding expenses, it is a representative personal account. Prepaid expenses, it is a representative personal account. So these are all on the representative personal account. So now the personal account rule. Now the personal account rule. The personal account rule, debit what comes in, credit what goes out. Sorry, no. Sorry. In the personal account rule, debit the receiver, credit the giver. I mention here rule. Debit, debit the receiver, debit the receiver, credit the giver. Debit the receiver and credit the giver. So debit the receiver here. Suppose I am explaining some examples. Suppose I am explaining examples here. Many examples are there. Later I will explain. Just listen. In the next, these are the personal account. In the personal rule, so personal rule, debit the receiver, credit the giver. That is the personal rule. Personal account rule. Personal account rule. So next second one, real account. These are the accounts of assets and properties of business. For example, plant and machinery. The assets related, you are applying the real account only. Assets, any assets related, that is tangible assets or intangible assets. You are applying the which rule? Real account only. So real account says debit the what comes in, credit what goes out. That is the rule. In the rule, debit, debit what comes in, credit what goes out. Credit what goes out. So which rule? Real account rule. Real account is related to assets. Debit what comes in, credit what goes out. Suppose you are purchasing any asset. So that asset is comes into the organization. That should be right on the debit side only. Suppose that asset is sold, that time that asset is goes out, you write down the credit side. Suppose cash paid, cash is comes in or goes out, comes in or goes out. Cash paid means you are paid the cash. Cash is goes out, which side you are entered? Credit side. So that is the rule. Next one, nominal account. Third one, nominal account. These are the accounts of expenses, losses, incomes, and gains. So incomes related, expenses related, losses related, gains related, you are applying the nominal account. Which rule you are applying? Nominal account. Nominal account is explaining debit all expenses and losses, credit all incomes and gains. Debit all expenses and losses, credit all incomes and gains. Which rule is explaining? Nominal rule. So nominal rule, debit all expenses and losses, which side you are entered? Debit side. Credit all incomes and gains, which side you are entered? Credit side. So debit all expenses and losses. Suppose your expenses means company is paying any rent. Rent is an expenditure. Company will pay the salaries. It is an expenditure. Insurance is paying advertisement expenses, selling expenses, commission paid, interest paid, audit fees, legal charges. These are all are the expenses. These all expenses you are enter into the which side? Debit side only. And next one, incomes, which side you are entered? Credit side. Commission received, discount received, rent received, interest received, dividend received, royalty received. These are all are the incomes. Incomes, which side you are entered? Credit side. In the finally, I'll mentioning the rules. Three rules I mentioned separately. The rules of debit and credit rules, nothing but golden rules. Golden rules. So personal account, debit the receiver and credit the giver. In the real account, debit what comes in, credit what goes out. In the nominal account, debit all expenses and losses, credit all incomes and gains. Incomes and gains. These are the three rules, main important rules. These rules are very, very important. These rules, based on these rules, you are passing the journal entries. Without rules, you can't pass the journal entries. So personal account, again, I will repeat it. Personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. So now some examples I will explain. Here I mentioned lot of examples here. So analysis of business transaction. This is the first business transaction. Krishna started a business with cash. Who will started? Krishna is started a business with cash, rupees 1 lakh rupee. Who will started? Krishna only. Krishna will started the business. So always you think the company point of view. Here, how many ledger accounts are there? Two ledger accounts. One is the capital, another one is the cash account. So capital, who will invested? Krishna is a invested. Krishna is a proprietor. In the proprietary will invested some amount into the business. That amount you call it as a capital. That amount is called as a capital. Capital you consider as a personal account. Capital you consider as a personal account. So he is a giver or receiver. Giver which side? Credit side. So now cash is comes in or goes out, comes into the organization. Cash is a asset. You are applying the which rule? Real account. Assets, which rule you are applying? Which rule you are applying? Assets, real account only. So now you are applying the real account. Real account says debit what comes in, credit what goes out. Cash is comes in or goes out, comes into the organization, that should be entered into the debit side. So cash is debit, capital is credit. And the next one, cash taken by proprietor for personal use purpose. So who will take in? Proprietor will withdraw the money for personal purpose. Proprietor here representative name for drawings. If your owner is withdraw the any money, cash or goods, that time you are called it as a drawings. Drawing is a representative personal account. Representative personal account. So drawings is a representative personal account, is a giver or receiver, receiver which side? Debit side. Now cash is comes in or goes out, goes out means which side? Credit side. So now I mention cash credit side, drawings I mentioning the debit side. The next one, goods purchased for cash. Goods purchased for cash or cash purchases, both are the similar. So now you are purchasing the goods for cash only. The purchases you consider as a expenses. Expenses which side? Debit side. You are applying the nominal account rule. Nominal account rule says debit all expenses and losses. Purchases is an expenses. Which side you are enter? Debit side. In the next one, you are purchasing, you pay the cash. Cash is comes in or goes out, goes out. Cash, which side you are entered? Credit side. So purchases, you are mentioning the debit side. Cash, you are mentioning the credit side. Sold goods for cash to Ravi. You are sold some goods to Ravi for cash only. So now cash is comes in or goes out, comes into the organization. The cash should be debited. So sold goods. Sold goods means sales. Sales is a income, revenue. That is the income. Incomes which side you entered? Credit side. So cash is debit. Sales is a credit. Goods purchased from Venkat. Goods purchased from Venkat. You are purchasing the goods. You are purchasing the goods from Venkat. Purchases. It is an expenses. Which side? Debit side. Who will give that goods? Who will give? Venkat is a giver. Venkat, which rule you are applying? Personal account. In the personal account, which side? The Venkat is a giver. Giver, which side? Credit side. The next one more point. Goods sold to Pawan. Goods sold to Pawan. Goods sold to Pawan. So now you are sold some goods to Pawan. Pawan is a receiver. So Pawan, you are applied the personal account. Pawan is a receiver. Receiver, which side? Debit side you are entered. In the next one, sales. Sales is a income. Which side you are entered? Credit side. Goods returned to Venkat. Who will returning? Company will returning. Company will return the goods to Venkat. Venkat is a receiver. Venkat is a receiver. Which side? Debit side. So your company is returning the goods. That is the purchase returns. Purchase returns you mentioning the credit side. Goods returned by Pawan. Now who will returning? Pawan is a return the goods. Pawan is a giver. Pawan is a giver. Which side? Credit side. So now Pawan will be returned. That is the sales return. Sales returns you mentioning the debit side. Furniture purchased for cash from Ravi. You are purchasing the furniture for cash from Ravi. Here name also given, cash also given. You mentioning the cash only. Why? It is a cash transaction. What you purchase furniture. Furniture is comes in or goes out, comes into the organization. That should be debit. Furniture is an asset. Furniture is an asset. Asset means you are applying the which rule? Real account. Real account says debit what comes in, credit what goes out. Furniture is comes into the organization. It should be debit. Now cash is comes in or goes out. Goes out. Which side you are entered? Credit side. Missionary purchased from Tata Limited. You are purchasing the missionary. Where you are purchasing from the Tata company? Tata Limited. Tata Limited is a personal account. Tata Limited company is a giver or receiver. Giver. Giver which side? Credit side. In missionary is comes in or goes out, comes in. Which side you are entered? Debit side. Motor car sold to Anil. Your company will sold the motor car to Anil. Anil is a receiver. Receiver which side? Debit side. Anil, which side you enter? Debit side only. In the motor car, if you sold, so that is the sale. Sales, which side enter? Credit side. Motor car is an asset. That asset is comes in or goes out. Goes out. Which side you entered? Credit side. Old cycle sold to Kumar for cash. Old cycle sold to Kumar for cash. You are sold some cycles. Old cycle sold to Kumar for cash. So if I am sold my old cycle, I am receiving the cash. Cash is comes in or goes out, comes in. Which side? Debit side. My cycle is comes in or goes out, goes out. Which side? Credit side. So cash is comes in debit side. Old cycle is goes out credit side. The next one more exam, some examples I will discuss. Received from Vishnu. Received from Vishnu. What you are receiving? Cash only. Cash received from Vishnu. Another name. Sometimes is given received from Vishnu or otherwise cash received from Vishnu. Both are the similar. You are receiving what you receive cash. Cash is comes in or goes out, comes in. Comes in means which side? Debit side. From who will give? Vishnu is a giver. Giver, which side you are entered? Credit side. So personal rule is applying personal rule. Debit the receiver, credit the giver. Here Vishnu is a giver. Giver, which side? Credit side. Next, one more point. Cash paid to Gopal. Cash paid to Gopal. You are paying the cash to Gopal. Cash is an asset. Cash is comes in or goes out. Goes out. Which side? Credit side. Who will receive that amount? Gopal. Gopal is a receiver or giver. Receiver. Receiver. Which side? Debit side. So now the entry Gopal account data to cash account. First you tell the debit, next you tell the credit only. Debit is the Gopal, credit is the cash. So Gopal account data to cash account. Next, commission received from Kiran. Commission received from Kiran. Commission received from Kiran. What you receive from the Kiran? Cash only. Cash is comes in or goes out, comes in. Which side you are entered? Debit side. Commission received is a income. Incomes which side? Credit side. You know the rules. Nominal rule. So nominal account it says debit all expenses and losses, credit all incomes and gains. Commission received is a income. Income which side? Credit side. Cash is an asset. Which rule you are applying? Real account. Cash is comes in or goes out, comes in. Which side? Debit side. Cash is debit. In commission is credit. Next, interest received. Interest received here. So interest received, it is also income. Income which side? Credit. What you receive? Cash only. Cash is comes in which side? Debit side. Rent paid rupees 5,000. Rent is an expenditure. Expenses which is side, debit side. Nominal account is explaining debit all expenses and losses, credit all incomes and gains. So rent is an expenditure. You mentioning the debit side. Cash is an asset. Which role real account? Cash is comes in or goes out, goes out. Which side? Credit side. Salaries paid to staff. Salaries is an expenditure, which side, debit side. What you pay cash. Cash is comes in or goes out, goes out. Which side, credit side. Cash deposited into bank rupees 10,000. Cash deposited into bank rupees 10,000. Now cash is comes in or goes out. Which side, credit side. That amount who will receive bank. Bank is a receiver. Receiver which side, debit side. Cash withdraw from bank for office use. You are withdrawing the money from bank for what purpose? Office purpose only. Now cash is comes in or goes out, comes in. Who will give that amount? Bank. Bank is a giver. Which side? Credit side. Now I explained 20 example. Next video I will discuss the remaining points. Almost 45 points I will explain. Next class I will continue the remaining. Thank you for listening.